The New Brunswick real estate market for the month of March is showing signs of declining sales and increase in new listings, which is showing me a sign of a shifting market. What we're gonna be going over in this video is what's happening in Canada on the real estate side, and also looking at some staggering job losses that we've seen recently, as well as what's going on for average home prices across the country in each province. And then we're gonna zoom into New Brunswick specifically and figure out what is going on here in this amazing province while we have a shift in consumer confidence when it comes to real estate, and what all this means whether you're looking to buy or sell. I hope you're doing super well. If this is your first time in on the channel, my name is Brandon Vincent. I'm a real estate agent here in St. John, New Brunswick. I've been actively selling real estate for over 7 years. My goal on this channel is to bring you relevant real estate information in an entertaining way. If you like the sound of that, do me a favor, hit the like, subscribe button. If at any point in this video you're watching and you have some questions, or you're reading the scenario differently than the way that I'm presenting it, I would love to hear your opinions down below in the comments. But without further ado, let's dive into this March market update for New Brunswick. Make sure to keep in mind that despite this being a March market update, which is coming out in the month of March, this is all going over the February stats because real estate is always 1 month behind when we're presenting the data from the previous month. Starting off with the national statistics for Canada, the Canadian housing activity stays quiet in February 2026. So the number of home sales recorded over the Canadian MLS sales dipped 1.3% month over month. February saw a continuation of the quieter levels of activity recorded in January, although there was some indication listings were starting to pick up speed toward the end of the month, said Sean Cathcart, Korea's senior economist. 2026 is still ultimately expected to be a story about pent-up first-time buyer demand finally seeing a chance to enter the market. They've had to wait a long time for mortgage rates to find a bottom, but some will no doubt continue to hold off for a bottom in prices in some Ontario and British Columbia markets. So what's important to note there is the fact that across the entire country, the sales have been slower. What that means is that things are kind of shifting right now. There's probably a little bit of consumer confidence that is changing compared to what we've seen over the last 5 years. Now, this is going to get even more important as we dive into the New Brunswick section and we get more hyper local on what is going on here. But before we do that, I just want to talk about something that I thought was staggering when it comes to the Canadian economy. And that's the fact that Canada's economy lost 84,000 jobs in February, with unemployment ticking up to 6.7%. So Canada has seen almost no job growth over the last 12 months, which is not ideal. So Canada's economy lost 84,000 jobs in February, while the unemployment rate edged up to 6.7% on Friday, a setback for the labor market and one of the worst monthly job losses seen in years outside of the pandemic. The decline in employment was largely driven by the drop in full-time and private sector jobs, the latter offsetting a short period of growth seen earlier in the fall. So employment mostly fell in all goods and services producing industries, with 18,000 jobs lost in wholesale and retail trade. Now, here's where it gets even more interesting, is 12,000 jobs lost in construction and 9,200 lost in manufacturing. And that was mostly men aged between 25 to 54, and young people aged 15 to 24 were the worst impacted by this drop. So the fact that construction has seen a major decline in jobs as well as manufacturing can be leading indicators as to what's going to be happening with the amount of homes that are going to be built. And I have a little bit of a theory on that, which we are going to get into a little bit later in the video. But this is a sign that we are going to keep a very close eye on. Firstly, the unemployment numbers, and we're going to be looking at the unemployment rate. Now, we're also going to be keeping a very close eye on how many of those construction jobs either come back or continue to lose, as well as manufacturing, because these really do give us an indication as to what is coming in the future when it comes to the amount of homes that are being built or not being built. I'll post a link to this article down below. This was just published on March 13th. But moving right along, we are going to be diving into the Bank of Canada, which has stated that they're going to be holding their interest rates despite the downstream effects of the Iran war. So even though we've seen some staggering job losses over the month of February for Canada, the Bank of Canada needs a little bit more time to figure out what is going on in the economy. So they decided to hold their rates at the 2.25% on Wednesday, but warning that the rising oil and natural prices caused by the war in Iran will push up inflation in the short term. That's what they're talking about. And they do mention that with the issues with the price of oil, how that can have a downstream effect onto pretty well all goods and services. They're going to wait and see exactly what is going on and kind of what transpires here in the next couple months. So the next rate announcement is going to be on April 29th. So we'll stay tuned for that. Keep a very close eye on the economy and what the Bank of Canada thinks they're going to end up doing. My thoughts are that if this issue in Iran continues and the oil prices do continue to rise, that what we could end up seeing is the inflation that is expected to come along with that. And then if all of the goods and services start to rise, then it becomes a little bit harder for builders. It actually becomes much harder for builders to turn a profit when they're building. So we could see the housing starts and new construction actually slow down. But at the same time, it could be a perfect storm where goods and services are going up, so inflation's completely rising, and the Bank of Canada needs to lower their interest rates to re-stimulate the economy. And if this does continue for much longer than we're expecting, then we could be in an issue where we have another supply crunch, where there's not many homes being built, but the Bank of Canada lowering the interest rates could then stimulate people to want to come back and start buying homes, putting more pressure on the already tight supply and demand that we've had throughout the country. So that's a little bit of my own theory that I've been looking at, but I'll be keeping a very, very close eye on it to figure out what is going on and kind of what's happening. Now we're going to take a quick look at the average home price of every province from the West Coast moving to the East Coast, starting with British Columbia. And keep in mind, this is all for the month of February 2026. Starting off with British Columbia, having an average house price of $932,243. The beautiful BC with their West Coast shoreline and their warm water over there on that side of Canada. Then moving into beautiful Alberta with their oil, we have an average home price of $521,364. And then the prairies of Saskatchewan have an average home price of $334,166 for the month of February. And then Manitoba has an average home price of $384,367. And the Ontario real estate market is seeing an average home price of $802,601 for the month of February. Moving into Quebec, $552,983. And now going to the East Coast, we're going to hit Newfoundland first. Well, they have an average home price of $332,983, going down to PEI, beautiful province if you haven't been there. We have the average home price of $422,667. Nova Scotia seeing an average home price of $467,926. And last but not least, we have New Brunswick with an average home price of $352,045 for the month of February. Now let's zoom in to New Brunswick and see what's going on across the province here. So here in New Brunswick, the headline reads, sales still trailing seasonal norms in New Brunswick, but new listings continue rising. So if you notice, a very similar trend to what's going on in the country is happening here in New Brunswick as well. It's why I like to start off on the macro, looking at the entire country and kind of zooming in to see if any of the effects that are happening across the country have an effect on us here in the province. So the number of homes sold through the MLS system in New Brunswick totaled 509 units units, February 2026. This was down 8.6% from February 2025. Home sales were 7.9% below the 5-year average and 8.4% below the 10-year average. So as you can see in the province, for our residential sales activity for the month of February only, we're actually looking like we're getting closer to the pre-pandemic levels of sales activity here prior to 2020. As you can see that we've had quite a bit of sales activity throughout the months of February for the last 5 years, but that is kind of changing right now. Now, that could be because we had a just crazy cold January, February, which pushed people to not be in the market as much, be kind of like, a little bit of hibernating because it's so cold. People don't like to actually go out and look at homes when it is freezing and there's storms and it's snowing all the time. It just kind of causes less sales activity. And that's been the winter that we've had here in New Brunswick as well. So that could play a little part into it. Checking out the residential active listings. So we can see that the active listings are actually starting to increase just slightly, not by a huge margin, but just slowly increasing year over year here. Now we are nowhere near the levels prior to the pandemic when it comes to the active listings. So showing that there is still a little bit of tightness on the inventory side of things. Residential months of inventory. So as I've said in other videos, anything that is 4 months or below is a seller's market. Between 4 months and 6 months of inventory is a balanced, and 6 months plus is a buyer's market. So for the province of New Brunswick for February, we are right around the 5-month mark, putting the province as a whole pretty well smack dab in the middle of a balanced market. Now let's compare the real estate stats for every major region in New Brunswick for the month of February 2026. Starting off with the Fredericton area, having 118 sales and seeing 207 new listings with a total dollar volume of $44,691,952. And their average price being at $378,745 for Fredericton. Now, Moncton, which always seems to have the largest amount of sales, had 183 sales and seen 327 new listings, while they seen $74,221,700 in their dollar volume for the sales. And they have an average home price of $405,583. Now, the Northern and Valley region, so Northern New Brunswick, seen 114 sales. They've seen 167 new listings, and they've seen $27,114,500 in their total dollar volume for sales. Now, they have a average home price of $237,846 up that way. Now, the St. John real estate market had 94 sales, 161 new listings. They seen $33 million, $162,700 in their sales volume, in the total volume. And we have an average house price of $352,795. What we're going to do now is we are going to go and look at the employment trends for New Brunswick. So we have some incredible charts collecting the unemployment rate for our province. So as you can see, we had some fairly high unemployment from 2012, and it was slowly declining for years, right up until about 2019. And then we had a massive spike. Everybody knows why, right at the start of 2020. But then we've actually seen a major push down, and our unemployment rate has been much lower than it was in the past, which is very, very good to see. The unemployment rate in New Brunswick was 6.8% as of February 2026, which was actually up 0.2% from the previous month. Now, something good to note, though, is the fact that there were 400 more full-time jobs in February compared to the month earlier. So New Brunswick seen 400 part-time part-time positions being lost, but we actually gained 400 more full-time positions. So to me, when I'm looking at that, I'm seeing a shift from people working part-time to full-time, which is actually putting more money into the economy. I would say that this is actually a sign of a more stable economy than we're seeing in some spots in Canada. Another very interesting chart here is the year-over-year full-time job growth. So this is for February, and it shows where we're losing jobs and what sectors we're gaining jobs in. So we've seen some loss in jobs in agricultural, natural resources, and utilities, but we've been gaining jobs here in New Brunswick in construction, manufacturing, and trade, which is actually very good, going back to my point that I made at the start of the video, talking about how more construction jobs and manufacturing jobs lead to more things being built. So that's actually great for our province to see here. Now, we've seen a massive drop in transportation and warehousing, and then also in the financial sector, but we've seen some growths in professional and the scientific sector, just slightly, a little bit into the business and building. We've seen a major growth into education and a medium growth into healthcare, which I think is important. We need a lot more healthcare workers here in New Brunswick. And the information and cultural, as well as the accommodation and food, seen a little growth with drops in other services and public administration. So those are some great charts, and you can actually dive into each city specifically here to get a further look, which is super, super useful. But I just wanted to give you the broad scope there. Let's check the consumer confidence, because these charts are very interesting. So this shows an index of the consumer confidence for the Atlantic provinces. And as you can see, we had some very, very confident people prior to 2020. We had actually some of our highs for consumer confidence between the 2017 and 2020. And then we had a big drop in confidence, obviously. It's super interesting to look at these charts and just see how they ebb and flow, especially with all of the major shifts economically that we've seen. But as the years continued, the confidence started to gain. But unfortunately, right around the fall of 2021, things just started to rapidly kind of decline here, and the confidence has been slowly dropping ever since, with some little ebbs and flows. But, it is sad to see the consumer confidence dropping. But what I like to look at here is how does your household budget compare to 6 months ago? So what these lines represent here are people that have either said better, same, worse, or they just have no idea. So the people that think that their household budget is the same as 6 months ago, well, that's starting to drop. And the people that think that their household budget is actually worse than 6 months ago has been increasing over the last few years. Now, the people that think that it's getting better is slowly creeping down, and the people that have no idea what the heck is going on with their income, they just they have no idea. So they just say, I don't know. They have no clue. How do you expect your household budget to change in the next 6 months? Do people think it's going to get better? Well, no, it's kind of creeping down. They don't believe it's going to get much better right now. Do they think it's going to get worse? Well, as we can see, that's been actually climbing. The people that think it's going to be the same is starting to drop. So these are some major indicators of what's going on psychologically in the heads of everybody in the Atlantic provinces, and the kind of whole morale of the moment and of the times. And then how do you feel your job situation and overall employment will be 6 months from now? Do people think there's going to be more jobs? Well, no, that's actually the lowest indicator here. Do people think it's going to be the same? They think it might. They think it's probably going to be just the same. The majority of people that think there's going to be fewer jobs is rising and has been rising since about 2023. And there's just a lot of folks that just don't know. They have no clue. Is now a good time to make a major purchase? The people saying that now is a good time to make a major purchase, the majority of people say it's a bad time, which is super interesting. That's super, super interesting, because I would say, it all depends. It all really depends on each person's own scenario, right? So is now a good time to make a major purchase? Well, if you're able to make the major purchase and you find a good deal and a good opportunity, something you're happy with, then that means it's a good time for you. But the overall sentiment, though, that's what this is, right? The majority of people think that it's a bad time. People that are not sure are growing, and people that think it's good are down here, right? So a lot of this has to do with psychology as well. So these people that think it's a good time to make a major purchase, they'll be getting into the market at some point because either they're ready or they're along the belief that it is a good time. So they're going to get their foot in the door probably one way or another. So, your mindset is super important. That's why I like doing these videos here, so that I can help to explain what is going on so that you at home can make a decision for yourself whether or not it is a good time or a bad time. With New Brunswick being one of the provinces that has the lowest average house price, I've said this many times and time again, but I do believe that because that we have some of the lower bar of entries for the housing market, that we're going to hold strong, that the housing prices here aren't going to take a major hit, despite some of the markets in Canada seeing some pretty significant drawbacks right now. I think that's because they were already so highly priced compared to the rest of the country, where us here in New Brunswick, we're already one of the lowest bars of entry per province. So I think for that reason, it's going to keep New Brunswick as an enticing option. We also have a great lifestyle here, lots of water, lots of nature. Things are being developed. It is a beautiful province with a great lifestyle. In saying that too, with the lowering of the sales and the increasing of new listings, that means that for the buyers right now that have been sitting on the sidelines waiting for a good opportunity, I would say this is a great time to be looking on the market right now, because we've been in such a tight market for the last 5 years that things are starting to loosen up right now. So it's probably the best time in the last 5 years to actually start looking at homes. And I've had some great opportunities with clients of mine that we've been looking for the last year, finally secured some properties just within the last few weeks, which is awesome to see. Super happy for them. And it's been a good opportunity. So any of the buyers right now that I've had on the sidelines, really working to get them out and looking, because it is a good time, despite what a lot of people think, where a lot of buyers are still in the mindset that everything's selling for over asking. Well, that's not exactly the case anymore, as you can see. And if you want to know more about what's going on in the St. John real estate market, then make sure that you click this video next, and I'll see you on the next video.